Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a fascinating story to kick off our show, straight from the financial hub of Hong Kong. Shanghai Commercial Bank, a traditional lender with over 75 years of history, is partnering with HashKey Exchange, a digital asset trading platform, to launch a co-branded credit card. This innovative move marks the first collaboration of its kind in Asia between a traditional bank and a digital trading platform. The credit card, set to be launched in the first half of next year, will be exclusively available to investors trading on HashKey Exchange. But that's not all. This partnership is just the beginning of a broader collaboration between the two companies, with plans to explore additional products, services, and risk management frameworks that bridge traditional finance and digital assets. Shanghai Commercial Bank is investing heavily in its digital transformation, with a HK 1.6 billion budget allocated over the next 5 years to upgrade its mobile app, digital platforms, and fintech capabilities. The bank is also renovating select branches into wealth management centers to compete with larger rivals and capture business from mainland enterprises looking to go global. This move comes as the Hong Kong Monetary Authority launches its FinTech 2030 strategy, urging banking and finance firms to deploy artificial intelligence and blockchain to strengthen the city's position as a leading fintech hub. It's an exciting time for the financial sector, with traditional lenders like Shanghai Commercial Bank embracing innovation and partnering with digital players to stay ahead of the curve. As we explore this story further, it's clear that the lines between traditional finance and digital assets are blurring. The question is, what does this mean for investors and the future of banking? We'll be discussing this topic in more depth later in the show, but for now, let's take a break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. As we dive into the world of finance and markets, it's clear that the year-end rally is on everyone's mind. The question on everyone's lips is, will this momentum carry over into 2026? Let's take a closer look. According to recent reports, the S&P 500 has erased its December losses, putting it on track for an 8th straight month of gains. That's quite a feat, and it's got many investors feeling optimistic about the future. Mark Hackett at Nationwide seems to think that everything is shaping up for a festive end to the year, driven by technical tailwinds, stimulus optimism, and a bit of self-fulfilling prophecy. But, as we always say on this show, it's essential to take a balanced view. While some are predicting a strong year-end and a solid start to next year, others are warning about rich valuations and the potential for a recession if the Federal Reserve doesn't continue lowering rates. Fed Governor Stephen Moran has expressed concerns that the central bank risks sparking a recession unless it continues on its current path. Meanwhile, in Asia, stocks are rising, with Japan's TOPIX climbing 0.5% and the MSCI Inc.'s gauge of Asia-Pacific equities up 0.3%. The yen is also making headlines, with Japan's Finance Minister Satsuki Katayama warning speculators that the country has a free hand to take bold action against currency moves that aren't in line with fundamentals. Now, I know some of you might be thinking, what about tech? Well, it's true that tech has led the market to the upside this year, and Chris Larkin at E-Trade from Morgan Stanley thinks that if a Santa Claus rally does kick in, it'll likely need to be fueled by positive tech sentiment. As we weigh all these factors, it's essential to remember that markets are inherently unpredictable. While some are forecasting a strong finish to the year, others are warning about potential pitfalls. As your trusted guide through the world of finance, I urge you to stay informed, stay vigilant, and always keep a level head. And with that, we'll take a short break before moving on to our final story of the day. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some exciting news from the pharmaceutical industry. The U.S. Food and Drug Administration has approved a pill version of the weight loss drug Wegovy, developed by Danish pharmaceutical giant Novo Nordisk. This marks a significant milestone in the treatment of obesity, as it provides a more convenient alternative to the injectable form of the medication. According to Novo Nordisk, the once-daily pill has shown an average weight loss of 16.6% in clinical trials, with a third of participants experiencing 20% or greater weight loss. The company expects to launch the pill in the US in early January 2026, and it's likely to give their sales a boost after a challenging year. It's worth noting that Novo Nordisk is not the only player in the weight loss market. Eli Lilly's Zepbound currently dominates the US market, but the approval of Wegovy's pill version could help Novo Nordisk gain some ground. Additionally, Lilly has its own daily weight loss pill, Orforglipron, under review for diabetes and weight loss, which is expected to be approved early in 2026. As with any new medication, it's essential to consider the potential risks and benefits. While Wegovy's pill version may offer a more convenient option for patients, it's crucial to weigh the costs and potential side effects against the benefits of weight loss. In conclusion, the approval of Wegovy's pill version is a significant development in the treatment of obesity, and it will be interesting to see how it impacts the pharmaceutical industry and patients alike. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.